So if you own and operate a business in Canada, how can you avoid charging GST on sales to your customers or clients? Well, there aren't many ways that you can avoid it, but there are a few, and that's what I'm going to cover in this video. And now, for starters, just a disclaimer, I don't work for the Canada Revenue Agency. I never have. I'm not an accountant. I never have been. I'm a business management consultant, and this video is just for general education purposes only. So if you're trying to navigate GST, make sure you do some of your own research. Check out the links I leave in the video description. Reach out to an accountant, reach out to the Canada Revenue Agency to make sure you have it right, because there can be a lot of nuance to GST and everyone's situation is different. So chances are you know what GST is. If you're here, that's goods and services tax. That's a federal sales tax in Canada, and it's classified as a value added tax. And so with GST, typically you have to charge that when you're making sales in business, but there are a few situations, a few ways in which you can avoid charging GST. So the first way in which you might be able to avoid charging GST on sales is by being classified as what's called a small supplier. And now this applies to most businesses, but not all. So again, do a little bit of research here and read the GST information website that I will link in the video description below. But being a small supplier basically means being a smaller business that isn't generating very much revenue. And the actual dollar threshold that the CRA goes by as of today is $30,000 in gross taxable revenue made within 4 consecutive quarters or less. If you've exceeded that amount, then you're no longer a small supplier in most cases. So $30,000 in gross taxable sales in 4 consecutive quarters or within 4 consecutive quarters, a quarter being 3 months and a calendar quarter being in alignment with the January to December calendar. So your first quarter of the year would be January, February, March. Second quarter would be April, May, June, and so on. And so with that, it doesn't necessarily have to be within 1 calendar year, like January to December. You could surpass that threshold, starting in the 4th quarter of 1 year and then into the 1st and 2nd quarters of another year, because it just has to be 4 consecutive calendar quarters. So if you can stay under that revenue threshold, then typically you can be considered a small supplier. Therefore, you don't have to register for a GST account and you don't have to charge it on sales. Now, another way to avoid having to charge GST on sales would be if you're selling things that are considered zero rated supplies, which means typically you still sign up for a GST account. It's just that you're charging 0% GST on the sales. And so in order to meet this criteria, you have to sell certain products, and those would be things like prescription drugs, basic groceries, so not restaurant food, but just basic groceries. Certain medical devices as well are classified as zero rated supplies, and most livestock. So those are some of the examples of zero rated supplies where you don't have to charge GST. And again, I recommend reading the GST information website that I will link in the video description. So that's the second way to avoid charging GST. And the third way would be to provide exempt services or exempt supplies. So with exempt supplies, just like zero rated supplies, these are very much limited to certain industries, certain products, and certain services. But some example of exempt supplies would be most medical services. So think of medical services being provided by nurses, doctors, physiotherapists, optometrists. In industries like that, professions like that, typically what they're providing for services are GST exempt. Another category is long-term residential rentals. Commercial is not included in this, so for commercial you do charge GST, but for long-term residential, typically it is GST exempt. Some other categories would be most forms of childcare services and also music lessons. And another example would be tutoring, and tutoring when it is specifically for a curriculum that is designated to an official educational authority or institution. So for example, if you are tutoring children in French because they're going to school and they're taking French classes and they need help with that curriculum, that would typically be GST exempt. Whereas if you're tutoring adults who just want to improve their French, just for personal growth, and they're wanting to go on vacation to a French-speaking country or whatever, that typically would not be considered GST exempt. So those are your 3 main options for not having to charge GST on sales. It would be either you're a small supplier, you have zero rated supplies that you're selling, or you have exempt supplies that you are providing. So if you want to learn more about that and read in more detail, again, I recommend reading the GST information page, and you can always reach out to the Canada Revenue Agency's business line to ask them questions just to make sure you're doing it correctly, because it is a little bit complicated. There is some nuance to GST, so you want to make sure that you're doing it right and charging it when you need to. So hopefully this video was helpful. If so, please click like, and feel free to check out my YouTube channel and subscribe as well. I currently have about 270 videos that cover business management and business startup topics.